Hey guys, welcome to the show. Ryan has a little glitch, technical glitch. Back in a minute. In the meantime, just wishing everybody welcome to our flow show. We write 30th of September, Tuesday, last day of the month, last day of the quarter, and there's bits and bobs going on, not in the least in the metals this morning, which we will run over, of course. So let's just wait for 20, 30 seconds for Ryan to be back and see if his problems are solved. Ryan, are you back and are your problems solved?
Yes.
All
Right.
right, then. Welcome, mate. I hope everything is going all right.
Yeah, sorry about that, folks. For some reason, the share screen button wasn't working. It was greyed out. No idea what's bloody going on there. Epoxy
Gotta
thing.
pay your
Anyway,
bills, mate.
yeah, well, Zoom needs to pay their bills. Right, so can you see the screen okay? I assume you can.
Yeah, yeah, yeah.
Good, good. Right, we're all up and running then. Cool. All right, okay, giving the old good morning, so no need to go over that again. Before we do crack into all the details of what's been going on, just want to make you aware, as usual. Well, I say as usual, this is the last day you've got to take part of our special offer going on the trader funding program. What you need to do is follow this link and enter any one of those codes in there. If you've been a prior customer, you can use a 30% off all plans using code FULL30. If you're a new customer, you can get 50% off the 5, 10 and 25k accounts using code NEW50. So those are going to be running out tonight, midnight. That deal will be gone. That'll be it. Done, dusted, finished. So if you want to grab that discount, now's the time to do it. Obviously, not when the flow show's on. You can go and do it after the flow show's finished. But yeah, take advantage of that. Be quick or be dead. Right, let's get cracking into the show. And going to start off, as we always do in China, a bit of data, some PMI data from those guys. We've got both reports here. The private Rocket, what's it called? Rocket Dog, Rating Dog, that's it. Manufacturing PMI. They still show it as the Kaijing services. It's not. It's now Rating Dog. So these lot need to catch up. Anyway, the private survey has manufacturing up 51.2, a nice gain there. Services down a pip to 52.9. We also got the national number, the official Chinese number. That had manufacturing improving as well, 49.8 from 49.4 prior, although services went back 3 points to 50.0, so a little bit softer in that number. The Aussie dollar got a little bit of a kick in this morning, as did BHP shares, because China has banned all BHP iron ore cargoes because they're in the middle of a bun fight over pricing. So China's putting the ban hammer down on that one. The China Securities Journal say that the PBOC is set to get rates lower in Q4 to maintain liquidity. As we've been mentioning, a little change to language that we heard from the PBOC yesterday. Now they're sending out little snippets in their state press and local news. So looks like we could be getting rate cuts or some easing coming in the latter part of the year. It is also Golden Week. That starts tomorrow. And China will be shut between the 1st and 8th of October. Hong Kong markets will be closed 1st to the 7th. This is just potentially another little bit of a tailwind for gold as well. Gold is often bought up going into the Golden Week, as it's given as gifts and whatever, though I don't know where all the people are getting the money from to buy at these prices, but there you go. It's just one of those seasonal things that tends to happen. Won't be the sole driver for gold going up, but you put enough fans behind something, you're going to move it. Over in Japan, a bit of data out from their industrial production numbers. If I can find it on the calendar, where it is. Are we up here? Yep, we're up here. Little bit softer on the month. IP down 1.2%, was expected to fall only 0.7%, though they are forecasting 1 month ahead at 4.1%, so quite a significant turnaround there. We also got some retail sales data as well. Retail sales year on year overall down 1.1%, was expected to rise 1%. So again, data this time going the wrong way. There was a pickup in large retail sales year on year, but the month-on-month number not looking too good. We had the summary of the September meeting, and it's definitely got a more hawkish slant to it than past meetings. So definite splits going on here. One member said it might be good to consider resuming hikes as 6 months have passed since the last one. Another said the economy and prices are on track, and if there's no deviation, we can adjust policy at a regular pace. Another one says that the BOJ should continue raising rates if the economy and prices track the forecast. Another said the interest rate should be set closer to neutral. Another conditions look ready to resume the rate hike stance. Now that was obviously tempered with some cautionary comments. Others didn't want to shock markets with a hike at that meeting. Some are still cautious over the economy. Some still want the BOJ to support the economy, and some wanted to wait for more data. Now, the only thing I would say about all these opinions is, and correct me if I'm wrong, Kay, just where it says one member doesn't mean that you only get one comment from each member. You could get several comments from the same member, because I've seen 18 comments and there's only 15 people on the thing. So there could be some double-ups in there.
Sure. I mean, if you look at the 18 comments, it could be 18 comments from one and the same member.
Yeah.
In theory. But yeah, no, you're right. You know what? If there wouldn't be the LDP head election, I would say it's bingo for end of October, mate. They will rise, and I still think there's a very good possibility they will, unless we see something really shocking happening in the economy in the meantime, or we get something strange happening on the LDP election. We heard that Takahashi is a bit more interventionist in everything than others maybe. So that may be a bit of a break, but no, I think it's on the cards for them to hike again on the 30th of October, unless something spectacular happens.
Yeah, I wouldn't be surprised if we get to October and there was a bit of caution over the US government shutdown, because they tend to look at everything that could be negative for Japan. Yeah. So yeah, if it raised its head, I wouldn't be surprised. Probably won't, but you know what I mean. It could be
quite funny that all the central banks. I mean, if you look at well, obviously not the Fed, but and ECB maybe to a lesser extent, but all the other central banks, they have, when they do their statements and comments, they first of all look at what's happening in the world before looking at what's happening in their own country. And I found it quite special that they all keep on hammering on what's happening, obviously in the States, but even the economic globally. So it's really meaning that they are basically reading out of the same book, right? Right here and now. Maybe we are going to see, maybe in 2026, I don't know, some more divergence, but it's quite funny because it's going over virtually the whole spectrum, from SMB to Banxico, Bank of Japan, you name it. They're all talking about the external economies first before looking inside.
Yeah, absolutely. Well, everyone's economy is all tied together, so you can see it from that standpoint. BOJ also cut their Q4 plan for the amount of super long bond purchases. This is not really news. We knew they were going to be shifting around what they're going to be doing to the shorter end. So that's going ahead for Q4. They did have a 2-year bond auction, which saw its weakest demand since 2009. Kay, do you think that's just really a yield play, considering what's on offer elsewhere?
On the super long bonds?
No, on the 2-year auction. That was weak.
Yeah, and I also think the market is preparing already for potentially another rate hike. It's just, yeah. Who wants to really? And most of the fund managers, asset managers, insurers, they shorten their maturities, but they won't go as well. 2 years is starting to be a bit short for a Japanese money manager, right? So I think that's an expectation perhaps for a potential rate hike.
Yeah, I think so too. The RBA, they kept their rate steady at 3.6%, as was expected. In the statement, they said labour market conditions are broadly steady. Policy decision was unanimous. The decline in underlying inflation has slowed. The June quarter inflation was within the 2 to 3% range, though the September quarter may be higher than previously expected. That's for inflation. Governor Bullock says the board sees the risks as broadly balanced and the economy in a good spot. Components of monthly CPI a little higher than expected, but inflation is not running away, although their main concentration is going to be the quarterly numbers. She said we will decide in November whether to cut rates or hold, but that's not forward guidance, just that they'll get more data in November. So not really much ado about anything for the Aussie over that, and the can is well and truly kicked until November. Right, the S&P, they intervened in the second quarter, blaming it on markets are blaming it on the surge from Trump's tariffs. They purchased 6.4 billion in Q2 US dollars in Q2. That's some 5.1 billion Swiss francs. There's also been, I don't know what to call it, conversations with the US that they are not manipulating their currencies. Kay, that's their first intervention for quite some time in Q2. Are we going to see more?
I'm actually relatively surprised. I thought when I looked at the FX reserves, I haven't really looked at it closely, but it was just revals and stuff like that. But they seem to have bought some dollars, as you just reported. Yeah, Schlegel wasn't really hinting at anything. It could be that we are just at levels where they say if we let it go, it's gonna go further, or perhaps countering whatever could be happening because of the uncertainty surrounding tariffs, etc. Not wanting the market let go, but did they effectively buy those dollars, or is it to do with revals and stuff in parts? Ryan. Ryan, we
Sorry,
lost.
I was on. Yeah, I don't know. I didn't look deep into the story. The story said they purchased FX
Oh, really?
to that tune, so I assume that's what it
Yeah.
is. So yeah, but again, it just this is something we explained around the SMB. Intervention from these guys isn't coming in with a big fat hammer and knocking it either way. It's smoothing, as we call it. They will just come in and hoover up on either side, depending on which way they fancy it, which way the strength or weakness is going, and they will just soak it up. I mean, we were complaining why Euro Swiss was stuck at 80-60 for so long. That's potentially an indication that they're doing something. Euro Swiss absolutely locked in a tight range. So, I mean, I wouldn't be surprised hearing this story that they've continued doing that, Kate.
Yeah, and now the market may be turning around saying like, hey, hang on a bit, maybe it's time to sell Swiss again, and you will have a move, maybe I don't know, dollar Swiss after the fix, and or euro Swiss back up into the 94s, for instance. But then we will have to see. I want to get back to that story because I really missed it personally.
I'll stick the link. If it's not in the chat room, I'll stick it in the chat room
Yeah,
after the show or something.
in our newsroom, please,
Yeah.
so I can have a read of it, because
Yeah.
that's a bit of a strange one. Yeah.
Yeah. Okay, we'll do. Right, moving on to the Bank of England, and Ramsden says we have a substantial. Let's start again. We have had substantial disinflation until recently. Headline inflation is to rise slightly further, but that will then be the peak. Good luck with that. We have seen the labour market continue to loosen and wage growth normalising, but the path of wage growth is still a concern for the MPC. He says he sees a loosening in the labour market as anchoring the inflation outlook, and sees scope for a further removal of policy restraint. So looking at for the time is right to jump the fence into the cut camp is Mr. Ramsden. Well, that inflation looks to be on the rise again, because according to the British Retail Consortium, or whatever it's called, BRC, shop prices have risen at the fastest pace since February, with food pricing up 4.2%. So some inflationary pressures coming in there. We also had a ton of data out this morning. We've had the final numbers from the UK, Q2 GDP confirming at 0.3%, down from the 0.7% in Q1. Year-on-year number up a bit better, 1.4. This is all final numbers, so no one really gives two fudges about it. We've had a bit of price data from Germany as well. Import prices coming in softer than expected on both metrics. Well, lower on both metrics, down 0.5 on a month, down 1.5 on the year. Retail sales took a dive as well. We're expected to rise 0.6, came in down 0.2 on the month. That's in August, so doesn't look like a good summer was had in Germany like elsewhere. Inflation data has been coming through as well. France have seen a bit of a jump in inflation. They were running at the 0.0s and 0. This. Their CPI number was 0.9 last month. It jumped to 1.2% this month. The HICP doing similar, 0.8 to 1.1, though both of those were less than expected. So a bit of inflation jump in France. Unemployment rose 14,000 in Germany, though the unemployment rate stayed unchanged. We also got the regional numbers from Germany, CPI numbers, and largely all coming in quite a bit higher, at least 2 to 3 points higher, depending on where you're looking. So Baden-Württemberg up 2 to 2.7, Bavaria up 3, Brandenburg up 1, Hesse up 2, North Rhine up 3, Saxony unchanged. So much higher inflation in Germany. Now the pan-German number, which comes out 1 o'clock, is only looking for about a 1 point gain in the CPI or the HICP. I think that might be a little low, given some of those numbers, if not all those numbers that we saw, particularly North Rhine, which is one of the biggest ones there. But the market, it shouldn't be too much of a shock because the market's seen those regionals. So maybe we get a 2.3, 2.4, something like that, potentially from Germany a bit later. Right, moving on. Back to France we'll go, because new PM Lecornu is looking in trouble already, because yesterday he started setting out his budget plans. They've already been given a knockback and rejected by the Socialist Party, which is sort of the moment one of the biggest blocs in French politics. So he's already under the cosh there. If he can't get a budget cobbled together over the months ahead, he'll be out the door again, and we do it all again. It's like being on a bloody roundabout. ECB's Lane says the inflation outlook is reasonably benign. He spoke before we got all that inflation data this morning. A little bit of data from the US yesterday, pending home sales. I'll scroll up anyway. Another surprising housing market that jumped 4%, was expected to rise only 0.2%. So again, we've just seen some of this housing data better performing than what's been expected and what we've seen over the last few months as well. FedSamac says inflation is too high and the trend is in the wrong direction. Something is changing in the labour market. The jobs market is still a low hiring, low firing environment. Fed Williams says monetary policy continues to be restrictive. The Fed is still in a position to put downward pressure on inflation. Policy should be driven by the data and the Fed to decide on monetary policy meeting by meeting. Fed's Muslim says monetary policy is between modestly restrictive and neutral, is open-minded to future potential cuts but needs to be cautious, and says there's limited room before policy becomes too loose. So potentially looking for cuts but not too many. Right, geopolitics time. There's a ton of this crap to get through as well. So we've had some talk about a plan to stop the hostilities in Gaza. This plan that Trump's put forward, where he will, don't know how this is all going to work out. He sort of takes control of an interim board that looks after the country, and underneath that will be ex-UK Prime Minister Tony Blair. So they're going to apparently be in charge and see the transition through. At the outset, PM Netanyahu in Israel said he supports Trump's plan to end the war, but he's against anything that declares Palestine a state. So that's still something that needs to be worked out, but we could potentially get some good news on that front. The Kremlin popped up to talk about all this Tomahawk cruise missile stuff, saying they heard the statement and that their military specialists are monitoring what's going on. And speaking on those missiles, the question is, who gives the target plans? Is it Americans or Ukrainians? Says that these missiles, this is no panacea that can change the situation at the front for Ukraine. The missiles will not change the situation on the battlefield, so they're brushing that off. Apparently, according to reports, Putin has ordered the largest autumn army call-up since 2016. So there's, unfortunately, more people going to get drummed up and drafted into the front lines just in time for winter and everything. That's going to throw at them as well. So that's not good news. You may have heard talk that Europe, NATO, are going to be building a drone wall to stop all these incursions and the potential for incursions from Russia. All sounds good, all sounds fancy, except German Defence Minister Pistorius has said that it might take 3 to 4 years before they get that up and running. So typical Europe, put a long timeline on it. Trump's going to be putting 100% tariffs on movies now, on films that are made outside of the US. This was a threat that popped up a while back, and now he's slapped it back on the table. Shutdown stuff. It looks like we are going to head to a shutdown unless there is some 11th hour dealings going on today. I'm not sure, though, even if they can get that stuff passed in time. But anyway, Senate Minority Leader Schumer said Trump heard our objections, but large differences remain, and the Democrats will not support a partisan bill that hurts healthcare, and they would not accept a 7 to 10 day stopgap bill that was put forward by the Republicans just to give themselves a bit more time. So the BLS, well, the US Labour Department has issued its shutdown notice, saying that basically everything data-wise will not be released, so we'll get no data in the event of a shutdown. I'm not sure if there's still, again, a last minute thing where they may get the appropriate funding to continue. That's down to the powers that be. But from this point, they expect to be shut down. So we will not get NFP data on Friday. I'm not going to do the NFP competition until they confirm one way or another. So if you're waiting for that, you have to wait a bit longer. Lastly, some potential good news for Australia and UK. They're part of a tri-nation group with the US. They had a deal that was under review. It's more a defence deal than anything else that was under review by the Pentagon. That's been given the green light. So that deal, it's called the AUKUS deal, AUKUS group, or whatever they want to call it. So that means that there were some submarines that were going to be sold to Australia. That's going to go ahead, 3 subs, and that deal is going to continue. And that's it on the headlines. Unless you've got anything else, Kay, please say no.
Mate, no, I think you've done enough. Let's look forward to what's happening for the rest of the day.
Yeah, exactly. So yeah. So really, we're all just, Kay, we're just skating around this shutdown stuff. Really, will it? Won't it? Will it? Won't it? It looks nailed on at the moment. So we better prepare. I know people are saying this isn't going to be a big deal because they'll kick the can and they'll get stuff done. But we're traders. We look at what can go wrong, not what can go right. So we better be ready for the fallout if it drags on.
When you make a checklist of stuff that can go right and wrong, it's for sure needs to be on there. So for the moment, we are in a bit of a situation waiting for that shutdown. In the meantime, we have a month-end, quarter-end in full swing. What may look as a shutdown hedge may be quarter-end stuff, or vice versa. But it's something really that we need to monitor going forward, especially this week. We could have some adverse news, as you say, some 11th hour resolution, but they seem miles apart, diametrically opposed, the left and right in the US. So it's going to be a difficult one to get to an agreement. And already Vance, Trump already said that they're okay to go into a shutdown. So we had a lot of the institutions already coming up saying that they will be able to continue to work. Others are going to be affected. But as you already mentioned as well, it all depends how long it lasts. You know, if they shut down tomorrow, but by the end of the week there is all of a sudden an agreement, it's going to be a storm in a teacup, right?
Yeah.
But it's something, historically it hasn't proven to have a lasting effect, but that's history, right? Today you're dealing with Trump and his team. Yeah. And we never know down to where along the wire they want to go with this. So yeah, I'd say watch the stock markets. If it goes down too faster, they will find an agreement.
Yeah, I mean, the thing is, Trump seems adamant that this is all the Democrats' fault. So if they shut down, it's their fault. And you know, it seems like if it happens, he's got his excuse. He's happy to let it happen because it's not his fault. And it's that stubbornness that has the potential to drag this out into something longer. Because if he's not going to shift on his stance, then it's down to the Dems to do so. And that can drag it out. Now, I thought the data when we had that 2018-19, I thought the data did get stopped, but it didn't, as I pointed out last week. But I can't. I'm remembering back to a point where we got some form of shutdown and the data didn't come, and it created a mess for months after. We'd be getting reports, 2-3 months they were playing catch up. I can't even remember. It was so long ago. So I'm not sure what is going to happen. Whether when we do reopen, things like, let's say it's 2 months, things like when it reopens, like the jobs report, whether they'll release 2 reports at once or just 1 report, or they'll do 1 and then catch up another one. That's the sort of crap we're going to have to deal with if it drags on.
Did they come with 2 in 1 last time?
I'll have to try and check back, but there's something there where they came with 2 in 1, or whatever it was. I can't remember, because it's pretty anal. They don't just go, right, well, we've got 2 months data to release, so we'll just do it. They released the old stuff first, and then they played catch up 2 months later. So it was like 3-4 months down the line before we got before they caught up. It was very anal. But as I say, I can't remember exactly what it was.
The thing where I'm a bit worried is the timing also of the year if it drags on.
Yeah.
And I'm talking purely in market terms. Because, as we know, a lot of companies need to close their year. And then you think about the asset managers over the turn. Then you think about, even the bigger insurance companies who have a lot to do in bonds, etc., and whatever. Over the term when they close their year, etc. And that time of the year, we are going now into October. If it drags on for over a month, which is still very doubtful, I still think that somewhere down the line there's going to be some sort of an accord found, or just we don't have an accord, but since we raised the debt limit, just go for it. But numbers won't be produced, and that's where, if it drags on, the real problem for markets will be, because there will be so much uncertainty and up in the air that somewhere liquidity may dry up in some of the main markets, and then I'm especially thinking about the bond market, and that could create huge problems over the turn. Now, we're not there yet, as I said, it's just a potential, but if it drags on, I can see big problems coming into the bond market.
Yeah, and as Stephen's just noted, there's also the benefits that expire in December. So it's not just this part, it's other parts as well, if it does drag out. I mean, they can kick this part and we get the other part still happening in December. So there's all different mechanics to it. But, it's going to, if it drags on, it is going to affect a lot of stuff. It's going to affect Q3 earnings date. Well, maybe not Q3, but it's going to affect Q4 earnings, because you do have some large corporations, large firms who have a lot of government contracts for all sorts of different things. And if healthcare, housing, defence, all that sort of stuff, and if their activity drops because the US is on shutdown, that's going to affect earnings. Although all this is going to be known unknowns, so the market will sort of look through it a little bit if someone has a dodgy earnings report because they're heavily induced in government contracts, but it still just makes a mess of everything. But we won't know till, well, certainly for us, when we wake up tomorrow morning, it'll either be shut down or it won't, and we'll deal with what it is. But just don't ignore the fact some people saying it's not a big deal. It's never a big deal until it is a big deal, and as traders, we should be ready for when it is a big deal, even if it doesn't ever happen. Right, let's move on. So we've got data coming up today that's going to be fairly important. Jolts, which is always a bit of a lagging indicator, but it is what it is. So that's we're running this sort of 7 to 9 million range. So if we're breaking out of that, then I think the market's going to react rather than if we stay in that sort of range. We also get the Conference Board Consumer Confidence number. So keep an eye on that. We're expecting it to pull back to 96 from 97.4. Keep an eye out for those inflation expectations as well. And we get some house price data out from both the S&P Case-Shiller and the FHFA. So we've got a bit of data there. That's another thing. This shutdown, and if it drags on, private data is going to be all we get. PMIs, what are the other ones we get? I've lost it now. Challenger, ADP, that sort of thing. So if we do get a shutdown tonight, that ADP report is probably going to be like a mini NFP for the market to trade. That's going to be all it's going to get regarding that. So that's going to make the number tomorrow hugely important, and all the private data moving forward for as long as we're shut down. So know what the market's going to react on moving forward. But anyway, that's what's coming today. A few Fed heads on the cards as well. So that's what we've got. Right, let's have a quick butchers around. Kay, the yen's getting a little bit of a pasting again today. It's pretty broad as well. Seeing dollar yen getting hit, euro yen getting hit, Aussie yen. That took a hit. Obviously, a bit of that BHP in there as well. Is that the biggest? Yeah, go on.
Yeah, as I said, a couple of things going on there. Well, first of all, we've already enough repeated this. Those models calling for dollar selling. It does seem that if you look at various currencies, there is a bit of that going on, but also that Bank of Japan, those reports coming out, it's kind of more and more hinting at the next move hike may be not too far away. But then you mentioned, and then, oh no, there's this other one that there was this report out a bit earlier and I posted it in our newsroom, the Asahi survey, that actually Koizumi is getting the most support from the diet members in numbers who support each candidate. And quite amazingly, Takahashi is only third in the list, even after Hayashi. So I think that has to do with it. And the last little bit, and you were talking about Chinese Golden Week. It has those tourist numbers have dropped a bit. But I recall when I was in Japan during Chinese Golden Week, plane loads, bus loads of Chinese people were dropped in Tokyo to come and do their shopping, and it's traditionally those days. But after COVID and then maybe tensions with China, those numbers have dropped now. I don't know where the numbers are again, but we have seen that the tourist numbers in Japan have been picking up largely thanks to the weak yen. But I'm perhaps thinking that some of it has to do with it as well, because traditionally during Golden Week in China, we saw the yen also print a high in former years. And it reminded me when you were talking about Golden Week earlier in our room in regards to gold, etc., that the yen also was most of the time bought into Golden Week because of the hordes of Chinese people coming to shop for better quality Japanese goods than they have in their own country.
Yeah. And Fred, who's over that way, saying that Thailand is also hurting from the Chinese tourists not showing up. So yeah, maybe there is a bit of politics going on there. And well, you wouldn't put it past the Chinese officials to encourage people to stay at home and spend their money than travel abroad, seeing as their economy's not exactly firing.
We'll have to look at the numbers, but I kind of remember last year or the year before that they were slowly coming back to Japan. The Chinese, those at least the middle class in China, they can't keep away from Japanese products. It's quite well known. So I trust it may just be a part of proceedings,
Yeah. And well, anyway, the main take I'm getting from dollar yen is that we're not in a situation where the market is going to be respecting the technicals that much. We've carved through a couple of levels that have been prior stall points, support and resistance points. We've come through them pretty easily. The bigger levels seem to be holding. Yesterday's or overnight, that 148.80s held after the break below. So that's three times now we've held below there after the break. So that's significant. All these sort of smaller, do they, don't they lines, not looking like they're doing much. So we might be needing to take a bit of a wide look on this one, probably down 147.50s. That's been a bit of an area, or it's going to be down at 147s and 146.80s again, where we may see something happening. I'm still long this. I've kept my stops well out the way, below 147. Even though this is quite a significant move, I don't mind. I'm going to try and stay in the trade a bit longer. I would potentially look at this area to pick some up if it's looking like it's end of month moves that we're seeing. So we could see a bit of a last blast today. Don't rule out seeing some new month moves tomorrow. That can happen on these quarterly numbers. It's more prevalent at the half year ends rather than the normal quarters, but you can see a little bit of, if someone's rebalancing for the end of the month, they may reallocate into the new month when they, put on their stuff here and there. So you can see a bit of fixed action at first day of the new month. So just something to be aware of. Yes, mate.
It is half year end in Japan.
Oh, in Japan, yeah.
Mm.
But yeah, for the rest, it's just Q3. But yeah, good point. Right, what else we look at? So Euro Sterling, it's had a little nick below yesterday. We're looking at this. We're back above and holding. Now we might be looking to the upside for this one. I still think this is just moving around based on what the dollar's doing in terms of speed moves between cable and euro dollar. And euro dollar is finding a bit of a fist again at this 17.50. We had a little poke above not too long ago, but we're back below. So this level is, again, something to be considered. If we start to get a hold above that, then that's probably going to give it the oomph to go climbing a bit higher, maybe back towards 118. Ali, I saw your trade. I assume you got your big figures wrong in your euro dollar trade. Because I don't see where you added into 1850 unless that's where you were before. I missed that one. So I'm assuming you added into 1750 for that one. But anyway, we'll keep an eye on that. That's your level at the moment that we can't seem to stay above. So just keep an eye on that. Aside from that, Aussie Kiwi, that's just on and on and on. This is a non-stop train, and we are getting up to yet another big potential area, this 38.2. We have been up here before. We've had little pokes before, big pokes before, but it is a level that we haven't managed to stay above, unlike what we've managed to do through some of these other big levels. So this might be a bit of a decider if we get up there. It's certainly something I don't want to stand in front of it, but I might not resist just having a little attempt up there just against that 38.2, just for a short. I won't be holding it for long, I can tell you that. But ranges are there to be broken, and if we do break here, potentially the sky's the limit where this keeps going. Kate, ask you about this one. This one, even with gold pulling back, Aussie still seems strong here. There's just nothing that's knocking the Aussie whatsoever.
I think month and quarter end is now in full swing, mate. I've noted that in our room as well, that Aussie would be high on my list as the currency is doing better into month and quarter end, and it is doing it. But I'd say again, watch the clock. Who knows? After 4 p.m. London time, everything can reverse, and I'm actually seriously thinking it may. And then especially when we talk about the dollar. Okay, Aussie Kiwi. Yeah, it's a level. It's something to keep an eye on. But there as well, if all of a sudden the demand disappears, like we have seen in the metals this morning, this thing could lose two big figures as well pretty rapidly. All in all, I still think, but it's because it's not been going on in this month or the last 2 weeks, right? It still seems that the Aussie is something that the market prefers to own than the Kiwi, right? We've seen Aussie dollar also regaining the 66, where the Kiwi dollar is still not being able to regain the 58. And so it's really Aussie people like or like it, or at least is doing much better than its cousin the Kiwi. But again, and today I think it's worth talking about those month end stuff and quarter end, because we're quarter end as well. I'm starting to have the impression that if we see more of what the models are calling for, that is dollar selling, that is going to be the last leg for now. Maybe the metals have shown us the way, but I am short dollars, but I've reduced it already quite a bit, because I'm really starting to think that it may be the end, the last spurt this afternoon into 4 p.m. coming, and if that's the case, it may print a low for the dollar, and then obviously then we're going to have to look at the shutdown. But pure market moves right now, I'm thinking it's the last bit. And then if you think, put it back into Aussie, which has been clearly bought into this end of month, end of quarter. RBA didn't change anything. Bullock was still very dovish, but they are in a good place. We will see, yada yada yada. But it just may be that the demand dries up come 4 p.m. or right before or right after. That'll remains to be seen. But to me, it's running on its last legs, and I may actually start to wind down all my dollar shorts and then just patiently wait for 4 p.m. and take the other side in to a certain extent. But I'll do it also selectively. Is something, for instance, you were talking about the yen before. I'm not sure with that golden week, etc., and those polls and the weekend upcoming that dollar yen is your best long, but it may be one. But I'm rather thinking about stuff like pure euro dollar or maybe Kiwi or a cable somewhere, maybe,
Yeah.
yeah, maybe cable as well is a candidate for all of a sudden flipping around if we see a bit of a last squeeze into 4 p.m. London time. That's just the idea with what I'm having right now. It's okay. Been riding the end of the month, end of the quarter for a while, but now we have to be a bit careful, I think, for the next 4 or 5 hours.
Yeah. Okay. Right, I'm going to punch it over to you. Just while I do that, on the gold, what could this quick spill be profit taking related to month end? You know, people thinking, right, we've had a good quarter in gold, we've been long, time to take some chips off the table. I mean, obviously, you've got the volatility when you've got a market that does nothing but go one way. When you do get reversal, you do get it can be wild because you get all the short termers getting knocked out. Is this a dip to buy, or do we have to let it wash out a bit further?
I won't buy it right now, Ryan, because there's a couple of things, and you also mentioned already the leg into Golden Week. They will be going into Golden Week, so it's probably it perhaps the last day of the Asian buying for a week, right? In the markets anyway, because they will be shut down. So that may have to do with it. That the species said like, oh, okay, the Asians are done, so now we don't need it anymore. But then there was this other thing that I was talking about also on Face yesterday, and I was speaking about in our room as well. And with Stelios, and I wanted the confirmation because we have seen that over the past end of months and especially the end of quarters. I think there must have been contracts to be paid in silver, deliveries made, whatever, and that may have all of a sudden come to an end, and the stockpiling in Asia coming to an end, and that's where we see this move. I am not going for one to pick up this now. I want to see what's happening in the next days, even if I'll be traveling, but uh, I want to see what's happening. If it would have been earlier, let's say, for instance, those setbacks, when there's nothing special, when there's no special date in the frame, I would probably be buying a dip because that's the way things are going and went. Today, it's a bit different. I'm not going to catch a knife just yet. I'd say let the day in the US go by, but if the buying really dried up, we could be in for another $100, lowering gold. And what I wanted to show as well is silver, where gold had another $40 rally in Asia. So it was clearly a gold thing today. Silver could not make a fresh high. So it does seem that there it's running out of steam as well. And this is just a short-term little channel that I've drawn this morning, but I would be very closely monitoring this 45, 40, 40, 50 here. If it starts to get lower, we may be in for a bigger retracement. Is it going to happen? No idea if it's going to happen right here and now. But the only thing I can say is that we need to monitor the US session today extremely closely. And I would say, especially as it will draw to a close, because it could just be that we are at the end of one big round of purchasing all those metals and then building in a pause. And Golden Week, if you talk about Asia, because Asia has definitely been buying again over the past week or two. And then if you talk about Asia, if they're close, there's probably not going to be a lot of buying going around. So I would say be careful to catch a knife right here and now. That's just the way that I'm going to look at it. I am not going to catch this knife. I took everything. Well, I had a bit of a jobbing in the last few days on the long side as well. I took everything off in gold this morning, and just because I'm getting worried that the demand may dry out all of a sudden. So that's the only thing I can say. I think we need to watch the US session very, very, very closely today. All right. And then and it's going to be, as I said, Aussie was one of the best currencies seeing demand. It's drying up a little bit around the high where we were before. Watch the last couple of hours going into the 4 p.m. London. We could see a little bit of an extension here, but again, looking across the whole board and also thinking about all the data, the real data that we had of late, there's not too much of a reason to go uber short dollars or to stay short dollars. So I do think that this is an end of quarter, end of month move as well. We had this little blip lower. That's when China said that they would stop all the shippings from BHP earlier this morning. But look, we held pretty nicely on that 65 3/4, which is going to be important once all those fixings are over. If we start to get back below 65 3/4, that may mean that the party is over. Okay, I've seen your comment on the Kiwi, Ali. For the time being, we can't get over 58 the figure, but again, trade with the clock in mind. Okay, it could be that into the 4 p.m. London time we have a bit of a squeeze, right? So but the more important today is to watch what happens after 4 p.m. in the run up to 4 p.m. in London, but especially afterwards. Again, as I say, I'm a bit short dollars, but I reduced them already, and I'm really ready to take the other side if and when it's warranted. And we can overlay quite a number of currencies. I think the cable may be one as well if we don't push through 134 3/4, 134.90, for instance. I wouldn't rule it out, that last push, depending on how much is left to do. But then be careful what happens after 4 p.m. London time. I think this is really, today is really important because we have seen some of those moves already unfold, which were the start of the end of month, etc. But it is going to be very important to watch what's happening after 4 p.m. And with that, Ryan, back over to you, mate.
Thank you very much, mate. So yeah, take care today, end of month. Just one of those days where you don't trust anything. Some of the moves that you might see, wait to get over the hump. And we'll see what happens with this shutdown bollocks. Anyway, that's it for today. Thank you very much for coming to the Flow Show. Have a great day. We'll see you tomorrow.
And I'll see you next week.
Oh, yeah. Cheers, Kay. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.